Hi, my name is David Estelle. Welcome to the Oxen Group Nightly. I'm the president, founder, and CEO of the Oxen Group. We're a financial analysis website and investment opportunities firm, and you can check us out at www.theoxengroup.com. We have a free 10-day trial as well as a free mailing list that you can join, so please check us out today. Let's get into tonight's Nightly. Tonight, some of the topics we'll be discussing are the Monday market wrap-up. We'll also be looking at our new position in Cena. We'll be looking at some solar entries that we took today in First Solar and Rene Solar. We'll be looking at 3 exits we had this morning for 3% gain. And we'll also be looking at our long-term rating on Rosetta Stone as well as our forecast for tomorrow. So the market had a great day today. After a tough week last week, we started out Monday very well. Some of the great news stories that helped out with that rise was we had easing tensions in Libya and a drop in oil prices that helped send the market higher. A combination of some ports that opened in Libya that will help pump out some more oil supply, as well as the Saudis continuing to say they can match the loss of supply that is coming from Libya, helped drop some of the oil prices, as well as some of the easing of the tensions, as it looks like Gaddafi will lose control of Libya, and those all helped the market that was down on that news earlier. We also had good economic news coming out about consumer income and spending that was pretty strong, which we'll get to a little bit more later. And then we also had major deals come out on the day. Ventas, a senior homes community company, as well as Equinox Minerals. They both made some big acquisitions today that were multi-billion-dollar acquisitions, as well as Warren Buffett over the weekend saying he was very positive about the American economy right now, and he's itchy, those were his exact words, to make an acquisition right now. So he sees the market and the opportunity starting to brew, and he wants to get back into the acquisitions market, which is very good for the economy. So a combination of good economic data and a combination of good company news and good macroeconomic points all helped to raise the market today. We also had, so let's talk a little bit more about the consumer spending and consumer income we had. Personal income rose 1% in January. It was the largest rise that we've had in personal income in 2 years, and the estimates from, most of the consensus estimates were 0.3% rise in January. So a lot of that helping income came from tax cuts. But the problem was that personal spending number came out at 0.2%. It was expected to come in at 0.4%, as analysts were expecting it to be a little bit larger given the tax cuts that did come out. And so it appears that the money that people have made, the extra money that they made in January, was not spent in January yet. And it'd be curious to see if that number rises in February, given the fact that we had a lot of bad weather in January throughout a lot of parts of the country. That could have helped reduce that number, as well as are people just saving money, still in this sort of recessionary mindset where saving is more better than spending, which in my opinion is in no way a bad thing at all. But that number was a little bit disappointing, but it did not hurt the market overall. Here's a chart on personal income and spending. You can see the income rising while spending wasn't rising, and you can see that there is some differences between the two, but in reality they move in the same trend. So if personal income continues to rise, we will see personal spending rise. So today the market started out, had a really nice open, opened well above the previous close, moved higher throughout the morning, and then started to give up some of those gains. We're in that kind of mindset right now where people are kind of unsure which way are we going. Are we going to go up from the, was that a support line that we had there at, around the 12,200, 12,150 area, or was this is this a dead cat bounce? Basically, the idea of a dead cat bounce is, you get a little bit of a gain, and then the market is really a dead cat overall, and so it'll bounce once, but it will end up flatlining basically the rest of the way until something in the macro scheme changes. But the difference was we got this in the afternoon, this really great gain, and you can see the top of these orange boxes show that we were just right off those highs of the day, and that's a really great sign for the market, very bullish sign. People were anticipating some news coming out tomorrow with auto sales, And there was some good company news on the deal side of the day. A lot of undervalued stocks, a lot of stocks that are able to be bought up, and I just don't think anybody wants to miss out on this opportunity. You probably see some retail investors getting back into things, buying up some of those undervalued stocks. And we took advantage of this opportunity to get in a couple things today. The first thing is we re-entered a position in Cena. First of all, we already had a position in it, and we were able to exit this morning at our target exit for a 3% gain after the stock had a great open. But after opening around the 184 level, it dropped back, and we were able to re-enter with a full position back at right at where we bought it in the first time for at 81.05. And we think that the company is going to have a good day tomorrow. And we were really ambitious about our expectations going into tomorrow. I think, given the fact that we thought Youku, another Chinese internet company that's sort of a competitor, not really a competitor, but a similar company as Sina in this sort of similar sector. They had very disappointing earnings, actually dropped 10% in after hours. The positive thing to see from Cena, though, with the 10% drop from Youku, was the stock actually rose 0.5% in after hours despite the Youku drop. So we'll see how much of an impact that has. They're definitely different companies. Cena's much more on the advertisement side of things, and Youku is a video website similar to like a YouTube. So you can see the chart. You see what we are seeing, and we entered here when the stock went all the way up to its exponential moving average on the 20-day, and then dropped all the way back to its moving average on the 50-day, the simple moving average. And we saw this as a great place to enter because it has a good support there, and these lines are converging, which shows a breakout. Now that breakout might not happen until probably obviously after earnings are reported, but you see that the K and the D lines are trending up. You see RSI has still got some definite room to improve, and this stock has a lot of potential moving into tomorrow with expected earnings to be very good. And we also had this stock is traded in the Nasdaq. It's pretty much a tech company, and Nasdaq had not a very good day today comparative to the Dow and the S&P 500. Actually, I think it ended in the red. So compared to the Dow having a great day. So if the Nasdaq can get a little bit of a raise tomorrow, or can rise with the rest of the market, or can buck the trend tomorrow and sort of make up for some of the gains it didn't have today, this could be very positive also for Cena. Here's a chart of First Solar. Excuse me. We bought a position today here, a recommended position, excuse me, at we got in at 147. We had a target entry at 147 today. And the reason we picked 147 was because this is basically the basement support line. Okay, this is the very last straw. The stock broke through its exponential moving average, and the next place it could go was its Bollinger Band. Broke through the lower Bollinger Band and now has hit the simple moving average for the 50-day. But you can see that the stock is setting up for this is a nice turning point for it. I mean, the stock is well below anywhere it's been in the last month, and it's getting to a point where it's kind of hitting some of the support it had before a big move at the beginning of February. And we think that this is a good place to get in because this is a good place for companies to upgrade. The stock, you have to believe that some of these retail investment corporation advisory firms are going to come out, some of these trading houses are going to come out with some upgrades on a lot of these solar companies, as they totally missed the ball here. A lot of them had some, neutral ratings, even some sell ratings on some of these companies, and they've just killed it on earnings. And First Solar's earnings were actually pretty good. They raised guidance, they had beat EPS, they missed on revenue, and the company overall, given the rise it had to have a nice healthy pullback. But I see this healthy pullback as a great way to re-enter the stock, and we're looking for this one to really shoot up tomorrow. We're hoping for some great earnings from Sol, Renea Sola. They're kind of the last big solar company to report this quarter, and they're expecting a really nice move from a negative EPS to a positive EPS, and it's actually moving up to around the 65, 0.65 range. So a huge change year over year for Renea Solar, and we're hoping that that can not only move up SOL, but can kind of be a catalyst to help spark some solar movement that you didn't see today. We had really good earnings from Jinko Solar actually today. JKS is the ticker, and that did not move Trina Solar or SunPower or First Solar or Yingli, some of the big dogs. But With that coupled with maybe some solar earnings good tomorrow, we think that that would be a very nice catalyst for the solar sector to get some bounce, and they're really hitting some of those basement prices, as we said. We also exited Apple today, our other half of a position for a 3.8% gain, and we also exited Baidu for a 3% gain, and those were some nice midterm holds we had for about 3 to 4 days. And we entered again the 25% position in SOL at the end of the day just to get some earnings exposure for tomorrow, as this stock has dropped tremendously over the last few days. And if they can just get a little bit of a nice positive report with some decent guidance, we think that this stock could definitely move 5 to 10%. And with a nice 25% position, we can get a nice quarter or shows you 2.5% overall gain comparative to if we had taken a full position. So, which would just be nice extra amount of earnings there. Finally, we still have our Infinera position. We've been holding this one for a very long time. We did double down back at the 780 area, and we're right now sitting down about, I think it's around 4 to 5%. So still down a few percentage points, but we're still holding this one, and we definitely have seen some good things out of it as the markets come back, and we're expecting it to make its way back up to around the 850 area where we can get out for an actual gain. Long-term ratings side of things, on Friday, we initiated coverage on Rosetta Stone. RST is the ticker. This is a software company that offers translation. Excuse me, not translation. Language learning software to help people learn other languages. And we initiated a hold rating on this with a price target of 11. The stock's trading around the $14 to $15 range right now. And the reason we didn't put a sell rating on this stock, well, we don't believe that this stock has a lot of growth potential. It's one of the companies that I've ever looked at that I don't see a lot of potential for growth, because the company has sort of one of those products where once you have it, you have the product, and once you've learned everything you need to learn. It's not something that needs to be reused. And it's also something where a lot of people, they're going to learn their language and that's it. It's not like there's a large group of people. There's a large group of people, but not a significant enough group of people that want to learn a bunch of languages just because they want to learn a bunch of languages. And so that really does mean that they have to find another revenue source. And right now they're going through a transitionary period where they're trying to adopt to a global market and sort of move into some of the Asian countries and European countries and offer an English program. And whether or not that's going to be successful or not, it really depends. Even if it is somewhat successful, we don't think the upside is tremendous on this company. I think if you could see, a 10 to 20% growth, that would be the only point where I think you would say, okay, this might have some potential to move from its current, IPO price level. But the reason we don't want to just give it a sell rating right away is because basically the jury is still out on whether or not this transition will be successful. It's shown some decent results for its 1 quarter of sort of data that we've gotten so far, but still definitely nothing exceptional. And I mean, the company just in the last couple of weeks said that they were going to miss EPS estimates in this quarter because Borders, one of their big one of their sellers, is going bankrupt and closing a lot of stores. So there's a lot of question marks with this company. That's why we have a hold rating right now. If some of those question marks start to come actualize into the sort of things that we expect to happen, this will definitely be a good sell rating. This stock could really be a single-digit stock for quite some time. However, they do have potential if they can adopt to the global market and can offer a product that a lot of international individuals would want. So for tomorrow, I think we're nervously bullish. Let's go with that. The market had a late rally that was really good for the market, and it definitely gives it a bullish case. But there is that sort of dead count bounce talk out there. There is the crisis in Libya that at any moment, if it changes, could potentially hurt the market a lot. And there is some, economic things on the agenda that I think are a little bit, make me a little nervous for tomorrow in construction spending and automobile sales. Now, construction spending has not been good for a long time, and I don't expect it to do anything great tomorrow again. But if it's really bad, it could, be somewhat of a catalyst to drop some sectors. And then automobile sales, I think a lot of people are expecting these to be very good. I saw some estimates out there for maybe GM to have a 39% year-over-year growth in sales in the February month, or excuse me, in the January month, and that number is very concerning to me. I don't know if they'll actually be. I'm sorry, it is February. They'll be able to reach that goal, and if they don't, it's going to be kind of, I think, pretty bad for the transport sector and could lead to some nervous